Great. So, welcome to a new episode of Off the Block. And today we have one of the most important topics in blockchains, which we already covered a couple of times in the past: privacy. Why is privacy so important? So, obviously, crypto has made finance, ownership, and coordination more open and transparent. But transparency alone is not always enough. For many real world use cases, such as payments, identity, voting, and institutional finance, privacy is essential. In this episode, we explore why confidentiality may not be one of the most important missing pieces of blockchain adoption, and how Zama is building infrastructure to bring privacy on public blockchains through fully homomorphic encryption, or FHEs, which I'm sure we're also going to explain what this exactly means for a less technical audience. And with this introduction, I'm very happy to introduce and welcome Rand Hindi, who's the co-founder and CEO of Zama. So Rand, great to have you here.
Thank you for having me, guys. Really happy to be here.
And we always start our podcast with the 10 rapid fire questions. Maybe for you, Rand, it's a little bit of a joke between Max and myself because we call it rapid fire questions because the idea was to get short answers.
Sure.
I think the record is that one of our guests spent like 25 minutes on the rapid fire questions, which wasn't the intended time period. So while we ask you to be short and quick with your answers, feel free to go more elaborate because I think at this stage now, we don't mind if the answers go too long.
No problem.
And with this, I hand over to Max to cover the first half of the questions.
Rand, great to have you. And as always, we play a little bit of good cop, a little bit of bad cop. I'm obviously the good cop, so we're going to get started with some, easygoing questions to warm you up to the audience as well. Great. First one is easy, or should be easy. How did you first get involved in crypto? Tell us a little bit about the story there.
So I got involved in crypto in 2013. At the time, a friend of mine was like super early Bitcoin maxi. So he had a bunch of Bitcoins, but he didn't have any money. He wasn't working. So he was basically fiat poor, Bitcoin heavy. And so I took him out for lunch, and to pay back for lunch, he sent me one Bitcoin. And so that was the beginning. That's when I got a wallet. Now, I'm going to be honest, I didn't keep much of it because in 2017, when we had this huge bull run to 20K, I thought I was the OG, and I started leveraging, and I woke up one day, I was out of the market. And so since that day, I learned a lesson. I leverage zero. I buy and hold, and that's basically it. Nothing else.
Wow. Well, firstly, I wish I had a friend as good as you. And secondly, I think it's also a lesson to a lot of the people who say, oh, I wish I was that lucky to find Bitcoin, 15, 12, whatever it may be years ago.
You'd be lucky if you kept it.
Exactly. You'd be lucky if temptation didn't get to you first, right? So I think a lot of people would have 100%.
Mt. Gox.
Agreed.
Wallet. There's so many things that happened that could have wrecked you, for sure.
Agreed. Buying and holding is not as easy as it sounds. Secondly, and we're obviously going to get into exactly what Zama does, but we all know it's trying to solve the problem, or what I call the blockchain privacy problem. But what originally drew you to privacy as an issue in crypto that's worth solving?
I think I've been working on privacy pretty much forever. When I was a teenager in the 90s, I created a social network. Mm-hmm. And I remember at the time that I could see everybody's data just because, I was running the servers of the social network. And that felt wrong. Right at the time, it felt wrong. When I then did my PhD in AI, I was doing it on AI applied to biology, specifically genetics. And when you manipulate genetic data, privacy is always something you consider. And then when I built my first company, an AI company, before Zama, privacy was already part of how we thought about building AI agents at the time. I sold a company in 2019, and then in 2020 started Zama specifically to figure out how to make fully homomorphic encryption work for blockchain and other things potentially.
Wow, makes sense. Well, we're going to break down what all that means from a technical perspective as well later on, but thanks for breaking down. And it's always good to have a guest on the call who's clearly more intelligent than his hosts put together. So that's also good news for everyone watching. We have one of the specialists in privacy here with us today. And then the third question is tying to that. If you could, for the people who may be hearing about Zama for the first time today, how would you explain it in one sentence?
So Zama is a layer of privacy for financial transactions on chain. Every time you want to pay someone, trade, get your salary, it doesn't really matter, but you want to do it on a public chain, we encrypt the flow of money so that nobody knows how much is moving or how much you own. So a good way to think about this is HTTPS for blockchain transactions.
Makes sense. I was actually going to follow up with if you had an analogy of sorts. So is it similar then, and I know I'm digressing a bit here, but is it similar then to how, say, WhatsApp would encrypt your messages with your friends or group chats or sorts?
In
Or
a
is it
way,
even taking a step further there?
in a way. So I think, the way encryption worked until today is you could encrypt data that you were transmitting, but the person receiving the data, if they wanted to provide a service, they had to decrypt it, run the service, encrypt the response back, and send it to you. With fully homomorphic encryption, FHE, which is the
Yeah,
technology Zama uses, you can actually do computation on the encrypted data without having to decrypt it first. And so
right,
why is
right.
that important for blockchain? Because it means that your on-chain data can remain encrypted on chain, even though you're running smart contracts on it.
Makes
And so I
sense.
think
Makes
a good
sense.
way to think about this is, end-to-end encryption, where you can also provide a service in the middle.
Right, right. Without having to like unbuckle the whole encryption, right?
Exactly.
So that's a benefit in the sense that you can do more, let's say, complicated applications, but still keeping the sanity of the data, making sure that
Exactly.
nobody can actually view it. That's great. Wish we could delve a little bit further in that, but we're in rapid fire today. So the next question I had for you is, when did you realize that privacy could be a big missing piece in the industry that we work in for blockchain technology?
I mean, pretty much forever. I think it's very obvious that if you want blockchain to become used globally for finance, for any financial transaction, you need privacy. There is this fallacy that people think that because people on chain don't care about privacy so far, nobody cares about privacy on chain. I think this is survivor bias. The only people who don't care are on chain. It means that everybody who cares is not yet on chain for exactly that reason. And
Yeah,
so,
yeah.
like I did a test actually. I went in the street. I walked up to a random dude and I said, "Hey, can I see your bank account?" He looked at me like a weirdo, but that's what blockchain is. So like, that's just not how the world works. Nobody wants their financial life to be public.
Makes a lot of sense. Yeah, I feel you're right. It's a bit of the confirmation bias that we may have in the industry, because nobody on chain might seemingly care about privacy. We assume it's not actually an issue for the industry. But if we want to solve the bigger ticket items, like actually bringing through financial services on chain,
For
as you
sure.
said, people don't want to reveal all their information. And so that's where transparency, and we'll get into this, but transparency is a bit of a double-edged sword, right, in the industry. And then lastly, for me, before I hand over to the bad cop, is what is one misconception that people still have about privacy in crypto? And I don't know, for me, I always think about this from, let's say, more philosophical standpoint. For thousands of years, we are transacting, bartering, or transacting with cash, and actually people privacy was inherent in their daily lives then. And now if you talk about privacy and you almost demand privacy, even at a personal level, and maybe more with a cypherpunk hat on here, people automatically assume you're doing something suspicious, which in my opinion is not always the case. But curious for your view, what do you think is the kind of misconceptions that we have for privacy still?
I think there are a couple. First, I think that people assume that privacy meant a new protocol, Bitcoin versus Zcash. So this is no longer the case. We built the
Uh-huh.
Zama protocol specifically to add a layer of privacy on top of existing chains. So you can have your money on Ethereum, on Solana, but have it encrypted. But you're still on Ethereum and Solana. That's really
Yep.
important. The second one is compliance. Up until now, privacy in chain meant either everything is encrypted or nothing is encrypted. The way that we built it, privacy is programmable. So it's up to the token issuer and the service provider to decide what's encrypted, what's not encrypted, and who can decrypt the data under contract. So for
Yep.
example, as a token issuer, I could say, okay, I want the data to be encrypted, but I want myself as a token issuer to be able to see all transactions of my token users so that I can comply with AML off chain. And so in that sense, it's like a bank. In a bank, you see your bank sees your data, but your neighbor doesn't. And you can
Yep.
now do the same thing on chain. So compliance is really something that you decide where you want to put it based on this
Yep.
very specific asset and use case you're building.
That makes a lot of sense. It's a kind of like a built on And I guess from a builder's perspective or from an entrepreneur perspective, I'm curious as to like why that was the direction that you took, because there's obviously a lot of chains or privacy focused protocols that then decide to build out their whole own infrastructure or whole own chain. And is the reason why you decided not to do that because they are users are already out there on these existing public chains, and you
Yeah.
believe that offering to them at source makes more sense than having to
Yeah,
bring those
basically.
users onto a new network, right? Makes
I mean,
sense.
basically, like, think about it. If you're going to build a mobile app today, are you
Yeah,
going to rebuild a phone for distribution, or are you going to distribute it on iOS and Android? iOS and Android, right? So why would it be
yeah,
different for blockchain? There's really no reason to build a new L1 in 2026. Like, we're not using all of the TPS capacity of existing L1s. Like, let's maybe start
yeah.
with that, and then we can see if we need more capacity.
Makes sense. And from a personal level, I'm also tired of seeing the 1,000th layer one be launched. So I'm happy we have something a little bit more diversified and different. Cool. I'll hand over to my co-host, the bad cop now, who's going to grill you with some tough ones. So I do
Go
hope you're
for it.
ready for that.
Go for it.
Actually, I think now more the easier questions will come, but I leave it up to you, Rand. Maybe at the end of the podcast, you can tell the audience who you think is the bad cop or not.
All
But
right.
the question I have for you is actually a question that you can also ask about decentralization. So, do you think people really care about privacy until they know what actually is public about their data?
Well, I mean, I think people care about privacy a lot. Again, like if I walk up to you in the street and ask you to show me your bank account, you probably wouldn't. If you look at the number of applications in your phone, would you feel comfortable with all of your text messages being broadcasted publicly to the world? Probably not, right? I think it's just, again, we got brainwashed into thinking privacy was not important on chain because we had no choice. So people had to make you believe that, otherwise nobody would use blockchains. But if there's one thing we've learned is when privacy exists and it doesn't change the service you're using, people just want it by default. Messaging apps a great example. Nobody cared about privacy in text messages, SMS, until WhatsApp came along and Telegram came along, and people realized, oh, I can have the exact same service with privacy. Why not? And this is exactly the same thing we're going to see with blockchain. My bet is in 4 years, 95% of financial transactions on public blockchains will be encrypted using Zama, because why not?
Okay, I'm interested to learn more why you believe this will be the case during the podcast. Going more over to Zama, what do you think is actually harder, building breakthrough cryptography or explaining why it matters?
Well, I don't think we have to explain what it matters. I think it has to be part of the default way that we do things. Ideally, people don't care about privacy, not because they gave up, but because it's just by default in every app they're using. So I think, for us, what's important is not explaining to end users why privacy matters. What's important is explaining to developers, to service providers, to token issuers why privacy matters, because they're the ones who are building privacy features for their users, right? Like Zama as a protocol is a B2B2C protocol, right? We're serving people that serve retail and institutions.
And Rand, would you say, I'm very curious, when you're having these conversations, do you think there's more added value or easier to sell it to developers what can be enabled by having privacy, which is not possible right now, or by updating what we already have now, but with the additional privacy layer? So what do you think is more appealing or is more exciting, both for you and maybe also for them? Like the use cases that are not possible yet, or improving, updating the current use case?
I think it's about 50-50. Right. I think, we see people telling us that they need privacy for existing use case to increase the addressable market. Payments, a good example. Payroll is not a market until you have privacy on salaries, right? And then there's another category of people that are like, oh, great, with a new primitive, we can build new things. Like, for example, would hiding leverage on a DEX fundamentally change the way people use DEXs? Probably. And so I think we just don't know what are going to be those new products yet. But we know that even for existing use cases, payments, swaps, lending, there's tremendous value and market size of adding privacy.
And since we're talking about use cases, what for you personally is the most exciting use case?
Yeah. Finance.
Yeah. More specific, maybe? Like, is there something you're thinking a
So,
lot about, or yeah?
so we work a lot on RWAs at the moment. I think RWAs, being in many cases security tokens, they have very strong privacy requirements. And if you're going to be an asset manager and you're going to be managing a portfolio of RWAs on chain, your strategy has to be hidden. So you get paid carried interest, because you have a strategy that people can just copy paste. Otherwise, why would I pay you if I can just copy paste someone on chain, right? Like it's just the math doesn't work. I think there are also a lot of strategies that people are starting to build around RWAs. And so my feeling is a lot of the curators, not just for lending, but for on-chain yield and strategies, are going to want to have a fully on-chain strategy that is still private because, that's their moat, that's their IP. So I think, we're just at the beginning of on-chain portfolio, asset management, on-chain hedge funds. All of that is going to happen because privacy enables it. And RWAs, right? Like, at some point you need more assets. Otherwise, it just not enough money.
Well, definitely. Coming to the last question, which is also my favorite because we always frame it same, but on the topic specific. If you had to describe the current state of blockchain privacy in one word, what would it be?
Inexistent, right? I think Zama is basically solving it. I'll give you a stat. So it took Zama basically like a few days to go from $0 to $100 million shielded, right? So what we call TVS, total value shielded. How many dollars were encrypted with the protocol? It took Zcash 18 months to get to $100 million. Okay. So like, this is tiny. This is a tiny market because we are bringing programmable privacy for the first time on top of existing public chains. And so I think, in a few years, we'll look back and think, 100 million, that was cute. Now we have 100 billion on chain, but the big enabler is happening now. So if you think privacy is big because Zcash is a few $1 billion market cap, you have no idea how big privacy is about to get in the next few years.
Oh, great. With this, I hand over back to Max for the first segment of the podcast.
Great. Thank you, Darius. We're going to unpack a little bit more the blockchain privacy problem and just go back to, what blockchains were initially, I guess, created for and how that created this kind of double-edged sword of transparency and why blockchains were great were because obviously public chains, they brought transparency, they brought verifiability to digital transactions. And as a result, it let us cut out some of those middlemen involved in typical financial transactions and cut costs and gain a lot of efficiency gains in the process. But I think what happened was that we really stemmed for and we really went for radical transparency where anyone can see everything on chain. And I think it was an approach to minimize trust, but it also creates, structural risks for real world use cases, especially the high ticket items that Rand was talking about in finance. So I have a few questions for you here and curious to see your opinion. Sure. But the first one is, why do you think privacy, generally speaking, remained and remains actually such a challenge in our industry, where in all the other industries, it is something that is seemingly taken into consideration from day one?
So I think if you go back to their roots, or the reason why blockchains are transparent is because one of the key tenets of blockchain is public verifiability. Mm-hmm. You want people to be able to rerun the state and verify it against consensus. The only way for people to do that is to have the data to recompute the states. Yep. And so there was just no way to have a globally distributed, publicly verifiable consensus without the data on chain being fully public and transparent. That was it. There was never a design objective of having transparent, public, visible states. The objective was global consensus and public verifiability. Now, with homomorphic encryption, with FHE and Zama, you can still have public verifiability on the computation, but the data is encrypted. So you get globally distributed consensus, public verifiability of the encrypted state, and privacy. This just wasn't possible, but you get all the advantages of a public blockchain without any of the privacy implications of using a public blockchain.
Makes sense. So for like the boomers in the room that might be watching this, I don't know, actually, maybe they don't watch our podcast, but there may be. But what that means essentially is that you're still, as a validator or as someone on the network, you're still able to prove that these transactions have actually occurred, but without actually seeing what those transactions were transacting in the first place, right? So you have now the kind of benefit of still being able to trust a public chain in that those validators are still behaving as they should be. But on top of that, for a user who's worried about someone spying on my own details when I send something to Rand or to Darius on the Ethereum chain, now those details won't be actually shared publicly. Okay, so that opens up, a whole variety of different interesting I think, direction. Transparency, it's been useful in some cases, but it exposes some of that information. And I think here is where financial services becomes quite interesting, right? Because you don't want to expose business logic or maybe payroll or counterparty information to everyone at all times. So is that also something that, is stemming from why Zama was created, really to tackle the big ticket items like high finance, let's say?
For sure. For sure. I mean, if you look at the trajectory of blockchain, it's been fast-ish, but I
Hmm.
mean, it's been 17 years since Bitcoin. 17 years. Guys, it's like nearly 2 decades at this
Yeah.
point. Okay. To give you some sense, 2 decades was the time between the 80s and the 2000s. Remember how much finance changed between 1980 and 2000. Like, derivatives were invented, futures, like everything was invented in the
Yeah.
80s, right? We had all of the big crashes, we had like LTCM, we had like the dot-com, all of that happened in 2 decades, okay? Like where we are today in crypto after 2 decades is tiny. It
Yeah.
should be 100 times bigger. Crypto should be, 20, 30, $50 trillion market cap. The reason why it isn't is because, first of all, regulation were lacking. So,
Yeah.
people couldn't use it without going to jail, pretty much, or getting in trouble. Now this is mostly solved. The US
Hmm.
is being
Yeah.
very clear. The US is open for crypto, which means the world is open for crypto. And the second problem was privacy. JP Morgan will not use Ethereum if everything they do is public, period, right? It's just not going to happen. And so I think the combination of privacy becoming accessible plus regulation being favorable, like we're going to see a tsunami of money moving on chain, but it's not going to move on chain the way we think about blockchain today. It's not going to be DeFi. It's not going to be permissionless, anonymous tokens. It's going to be TradFi on chain. And
Yeah.
we have to understand that, we have to understand we're not reinventing a new financial system. We are making the existing financial system a million times more efficient and I would say with high
And
velocity.
absorbing it. Yeah.
Exactly.
Yeah. Makes sense. And I guess those 2 points that you mentioned, one on privacy and then one on the regulatory piece, arguably both would be needed to actually, absorb institutional
Oh yeah.
finance or
Oh yeah.
absorb them.
And I
And
think it's going
even
to be
one
very,
without the other, it wouldn't have happened
no,
in either
definitely not.
case.
I mean,
Yeah.
regulation for sure. Nothing would happen without
No, of
regulation.
course. Yeah.
And privacy, I think, you could have like a little bit more money, maybe 100 billion plus in DeFi. What's 100 billion compared to, the $70 trillion financial industry,
Yeah.
right?
Yeah.
I'm not even talking about tokenizing energy, I'm not talking about all these things. Like, if you put all these things together, it's what, like $220 trillion of assets that people are basically monetizing somehow. Like it's
Yeah.
huge. If you want that to go on chain, you need to offer the same level of guarantees that TradFi has today, which is privacy, regulation, compliance, insurance, all of the panoply of things that people are expecting.
And yeah, and ultimately, we talked about this also in the rapid fire questions. Users will only absorb certain applications once they are at par, maybe with what they're
Yes,
used to in the traditional sense. But we won't get those applications if we don't have those traditional players involved,
exactly.
probably in the first place. So I think this kind of what we've seen with regulation coming out, and also now what we're seeing for institutions that, due to regulation, want to start actually involving themselves with the industry, does mean that privacy becomes the next problem to solve for.
Yeah.
So I think this is a very timely topic, actually. And I think the last question I have before we go into maybe a bit more on how Zama actually approaches confidentiality would be, is the goal, because I would argue that that transparency is still useful in some use cases. So the goal wasn't to make blockchains fully private, and i.e. the similar enterprise type of chains that we saw in the 2010s,
Yeah.
led by IBM and stuff, because those kind of end up just like walled gardens. But the idea was to make it let's say, programmable, right? Depending on the use case that you need, you could have privacy, or depending, if you don't want that necessarily, you don't have to absorb it. So I guess that's also, we're going to talk about that in the next section, but I guess that's also a little bit about why you guys took the approach that you did,
Mhm.
right? To be bolted on to existing public chains so that in the end, it's in the user's hand whether they feel that this is something that privacy is necessary for or isn't. Would that be correct? Am I reading this right so far?
Yeah. So I think Private chains are interesting, right? Because they definitely had a comeback recently, with Canton and now Tempo zones, right?
Yeah.
Basically the same thing, right? Just Tempo taking a shot at Canton pretty
Yeah.
much. Both of which are really just, iterations on Ethereum's L2 kind of idea, right? You basically just have like a bunch of chains. Just in the case of Ethereum, those L2s were public, here they're private. But same
Yeah.
idea. I like to see this the same way as like the intranets. Remember the intranets of the 90s, right?
Yeah. Yeah.
So what was an intranet? It was a private network on which you had all of your company information. And that private network, it was very secure because only you could access it. It was very private because only you could access the data in it. And, like intranets from company A would connect to intranet for company B so that it could exchange data with each other. Okay. That was basically, better corporate rails, if you want.
Yeah.
Then the internet came about. What was the internet? One globally shared public network that everybody could use with the same set of standards. The problem is you could use the internet for sharing sensitive information or for transacting financially because, it was public, right?
Yeah.
Then HTTPS came about. It allowed you to have encrypted communications on top of this public internet network. And from that, we had e-commerce because you can now pay on the internet without exposing your financial information, credit cards. From that, we had secure messaging. From that, we had secure data sharing between companies. Everything that made intranets valuable were now
Was due to
possible
the
of this global
openness.
internet,
Yeah.
right? And that in turn created $50 trillion of economic value, right? All of AI today is because the internet existed. All of like those big, social media companies, search engine companies, like all of that exists because the internet existed. And I think the same thing is going to happen to blockchain. Private chains are as useless in 5 years as intranets were in days because Zama and FHE is adding the layer of encryption to public chains the way that HTTPS added it to the internet. There is not a single example of private networks outcompeting a public network with encryption. It does not exist in history.
No, exactly. It's something that we also noted over all of history. Open-netted protocols do have a much larger addressable market than something that's closed off. And
it's
you
building a new
do,
economy versus just making the old thing a little bit better. We're building a new economy by putting Zama on top of Ethereum and Solana.
Cool. Well, I guess that is a nice segue for the next section, which is, we're building a new economy, but how? And I'll hand it off to Darius to break down with you how actually fully homomorphic encryption works, how Zama's approach is different to other privacy approaches. So if you guys are not the technical person, don't worry. They're going to do a great job breaking it down in layman's terms, because otherwise I wouldn't even understand it. So take it.
I mean, now the pressure is on. Thanks, Max. But I think I want to talk about Zama, obviously. But first of all, and I think I never asked you this question around why they named Zama.
So Zama is the city where the Romans defeated the Carthaginians, Hannibal, right? Once and for all. So it was a turning point in the war between Rome and Carthage, where Carthage never recovered after that, right? They're basically out of the game. And so we think that FHE is a turning point in privacy where no matter how much you try to see what's happening, it's encrypted all the time. And so there's just nothing you can gain from it. So it's a turning point in privacy the same way that the Battle of Zama was a turning point in the fight between Rome and Carthage.
Okay, so it's not an elephant killer in that way.
It's not an elephant killer in that way, but it's pushing back against the barbaric invasion of our privacy.
I see. And we already talked about this and you mentioned it, but still it was interesting, when you were deciding to build Zama, and also please correct me, but I believe that your project before was an AI privacy project, correct? So why did you decide to go to crypto while we now have so many crypto folks pivoting away to AI? So you basically did the opposite, or were you ahead? Or
I mean,
how came it?
I guess I built a language model AI company in 2015, right? And at the time, we could do some things, right? But LLMs, as we know them today, only started appearing around 2017, 2018, when I was kind of on the tail end of building this company. We got acquired in 2019, right? And, at the time, frankly, it's just nobody knew we needed so much resources and capital to make it work, right? So look, it was a good exit. I made a bunch of money out of it, gave me a lot of money to invest. So, I've invested in 100 different projects around deep tech and crypto since 2020. So I've been very lucky to be involved in a lot of things. And Zama for me was the obvious next thing to do. Because when I worked in my previous company on AI, privacy was already a big topic for us. And that's where I discovered fully homomorphic encryption. That's where I met my co-founder, Pascal Payet, who's one of the inventors of FHE. And so when I sold my company, Pascal called me and said, hey, do you want to build an FHE company? I was like, hell yeah. How often do you get the opportunity to build a company in something so exciting with a perfect co-founder to do it with? So like literally a week after I sold my previous company, we started Zama. So it was really, really
That's
back to back.
crazy.
Yeah.
And also, I wasn't aware actually that your co-founder is also the creator of FHE.
Yeah. Oh, he's a big deal in this space for sure.
Crazy.
It's like imagine like launching an L1 with Vitalik.
Yeah.
Like he's that kind of guy, but for FHE.
100%. And I was wondering, like at the beginning when you were iterating on Zama, was it clear that you're going to be like basically privacy layer on top
No.
for other L1s and L2s?
No.
Or were you also obviously, which I think is very reasonable, to maybe go the L1 route yourself and try to build a network by itself?
In fact,
What were the... Yeah,
it wasn't even blockchain. So it wasn't even blockchain. So when we started a company, we knew it would take us 3 years-ish to make the technology work, to make FHE work. So I told my first investors at the time, like, hey, look, guys, we're probably not going to make any money or even know what a product is for at least 2 or 3 years. We're like, okay, and if this technology is as amazing as it sounds, there will be a market for this technology. We just don't know what that market is. We looked at confidential AI, we looked at confidential blockchain, and then we realized that blockchain really needed privacy. FHE was such a perfect fit for that, this was the market, right? And so in 2022, we decided to really go deep into blockchain specifically. And initially, we just started licensing our technology to other blockchain companies who wanted to add privacy. But talking to customers, most of them didn't want to launch a new chain. They wanted to use Ethereum and Solana. And so we thought about, okay, how can we bring privacy to Ethereum and Solana? And from that, Zama protocol, ended up being created. It wasn't like, in 2020, I thought, oh, we need to put FHE on Ethereum. It's like, it was a progressive thing where honestly, we just went where the market is. Look, I'm going to be very honest. Like at the end of the day, you can try to convince people to use your technology, but it's much better to go where people already are and need your technology.
And maybe for our audience, so first time I actively used Zama was when you guys were doing your public token sale auction, which was very cool because as a user, as a participant, I had to shield my stables. I think it was USDC. So I could actually see basically how you guys are working and what the added value is. I think you could do different bids, if I remember correctly, but you couldn't see at what other prices people bidded. So this was the whole idea of being on the blockchain, but still having the privacy. But maybe for our audience, just very simply speaking, because you already mentioned like the concept of shielded tokens, but can you explain again just a basic workflow? Like how does it look for a regular user, and then maybe also in a second step for institutional player to use Zama?
It's very easy. So any ERC20 token can be converted into a confidential token where your balances and transfer amounts are encrypted. So the way you do that is you're literally just in your wallet or any kind of portfolio app or with your custodian, you literally click shield and that will transfer your, let's say, USDC and mint the equivalent amount of confidential USDC. And from that point, everything you do is basically encrypted. Okay? So it's on Ethereum. This is like a transactional Ethereum that's doing this. Like you're not bridging to a different chain. You're not, using a different wallet. You're signing with, MetaMask, with whatever custody solution you're using, as you would be for public tokens. And that's really important. Integrating this into the existing ecosystem of tools is a big, big part of what we focus on at the moment.
I mean, it also massively lowers barriers to use Zama because you don't need to set up a new wallet or get your token.
In the auction. How did the auction feel?
Great. I mean, it was very seamless. It was instant.
Exactly. It felt like using Ethereum, right? Like, did it feel like...
Yes. No.
That's exactly the point. The point is, if we do our job right, we don't exist. You see what I mean? Like, people don't know they're interacting with Zama. They're interacting with an app on Ethereum.
Mm-hmm.
That's how we're thinking about this. We're trying to really be frictionless. Maybe there's a logo somewhere that says, encrypted with Zama or something, kind of Intel Inside for privacy. But again, we are not trying to be user-facing. We're trying to be the layer of encryption between the user and the blockchain they're interacting with.
And Maybe out of curiosity. So let's say as a financial institution, I want to use Zama, but I also have to go through a KYC AML. So how can I show the transactions while when I was doing, they were still like shielded and private? Like, how would that work?
Well, I think so that depends on the token issuer. So each token issuer of confidential tokens can decide what compliance rules they want to apply to their token holders. So for example, there are some security token issuers that only allow whitelisted KYC user to hold their token. So in that case, everybody's KYC. There are other token issuers who want to create a private version of commodities. No KYC, everything's encrypted, Bitcoin encrypted. And then there are other people like stablecoin providers that basically say, okay, you don't need KYC to use my stablecoin. You're going to have privacy. But I, as the stablecoin issuer, will see all of your transactions so that I can basically make sure you're not laundering money and things like that. So it really depends on the token type, on the issuer. We as a protocol don't force you to do things one way or another. We just give you the tools to decide what's encrypted and who can decrypt it.
I see. And maybe the last question in this segment. So obviously we have talked quite a lot about FHE's fully homomorphic encryption, which is the main technology enabling what Zama is doing. I think what it is, we already said, like in a very simple way, it's to keep data encrypted while still being processed, which obviously brings a lot of benefit. The question I just had, like, obviously, because there's like different players in this market, there's different technologies in here. So there's MCPs, CK, FHEs, probably more. Again, I'm also not the most technically averse when it comes to this. What would you say are the major trade-offs of this? And why did you guys choose the FHE? And why do you think, I assume, being superior to other potential providers in this area?
So we don't assume that our technology is better. That's what people tell us. When we talk to custodians, exchanges to integrate us, there is no other privacy solution they're considering for public chains. They're looking at Canton, obviously, and then they're looking at Zama for public chain privacy. That's it. That's it. And there are multiple reasons for this. So I'm going to put aside private chains. We talked about it earlier. Internet. I think it's very obvious internet is better. Within people trying to bring privacy to public chain, you've got people doing FHE like Zama, people doing MPC. MPC, you basically share the state between a bunch of different nodes. It's okay, but MPC is hard to scale and make verifiable. So I think, you basically max out at 100 TPS effectively. FHE can scale indefinitely. It's a compute problem. And, like you just put GPUs behind it and you can do 10,000 TPS. It's really that simple. So like it's a Moore's law problem, which we know how to solve, obviously, right? Like just more money, then it goes faster. ZK, very popular, of course, but ZK doesn't give you composability. When you shield your Zcash tokens, you can send them privately, but you cannot stake them, you cannot swap them, like you're kind of stuck with a single use case. FHE is fully composable. Your confidential FHE tokens can be used in DeFi. They can be lent in Morpho. They can be swapped on Uniswap. Everything you can do with a public token, you can do with an FHE token in exactly the same way, in exactly the same level of composability. And finally, Ts, which are hardware enclaves, they've been broken 42 times in 2 years. I forgot like a squaring of that 7, I guess. 42 times in 2 years. So nobody wants to touch that with a stick because they know that this is inherently insecure in the blockchain setting. FHE is secure even against quantum computers. So the data you're encrypting and putting on chain today with Zama cannot be broken even by future quantum computers. If you can break FHE, you break all of existing cryptography that works against quantum computers, which means no longer any private communications, no military communications, no signature for your wallets, no credit cards. All of that disappears if you can break FHE. So, I would argue we have bigger problems in the world if that's the case than just encrypting your balances on chain. But today, FHE is the only technology. Zama is the only privacy technology that gives you public verifiability, scalability, composability, and security against quantum computers.
That's a great answer, especially composability. I think we said we don't have too much time anymore, so I hand it over to Max for the lookout and closing. Yeah.
But just before we get to that, I just have 2 more questions on kind of the use case side of things. And one is, we did mention the examples of what we think in terms of financial applications that are important for privacy. But just curious if you have any like not things that are obviously being worked on behind the scenes, but any kind of like thought experiments that you guys did internally when you guys were building into this, that you thought this is such a clear win that we need to go for, having privacy on chain, because ultimately you guys were deciding about just privacy, what kind of industries it should fit in. But once you landed on blockchains, you must have also landed on specific kind of use cases that you think
Yeah. So I
would
think
land.
Zama is very specifically targeting financial use cases on chain.
Yeah. Okay.
Within financial use cases, we're currently looking at B2B payments, so cross-border payments, payroll, that kind of stuff. We're looking at RWA, so everything from issuing to settlement of tokenized assets on public chains. And we are looking at DeFi, so confidential swaps, confidential lending markets, the usual stuff that we currently work with. There could be other things that we look at, but these are the three main categories we decided to focus on because this is where we see the most demand from large pockets of money looking to move on chain.
Yep. Yep. Makes sense. I mean, I think like I do track the thesis, and obviously I did my homework before coming here today. So I did go obviously on the Zama website, which, by the way, for all our viewers here, I really welcome you to check it out. There's also a nice explainer on FHE, and it has a nice little tutorial on how you can actually decrypt information without actually having, like, that the information can be encrypted without having to then decrypt and still being able to run different applications. So there's a really nice little teach-in section there. So good work on your side as well to whichever team member took care of that. I thought it was great. But ultimately, if I understood correctly, your main thesis also hinges on two different sides, that you think in blockchains, on-chain wise, most transactions will become confidential. And that follows obviously what you guys saw in the traditional sense, in the traditional financial ecosystem, that most transactions are confidential. And then due to the kind of inherent benefits from an efficiency perspective of blockchains, you guys thought, okay, well, a lot of that will regardless move on chain. And so if it's not us that takes the pie, someone else will take the pie. So that I follow that. And then just to double click on what you said in terms of existing applications where you think it becomes useful, you pointed towards DeFi. And I'm just curious as to what the thinking behind there is, because I do see a lot of benefits on, for instance, large players on Hyperliquid, for instance, not being sniped by community members because of their large leveraged positions, for instance. Or is that what you're thinking about, making it a less hunting ground arena?
So definitely this one thing for sure, right? Liquidation hunting is an issue. It's a big issue with any kind of DEX, or to be honest, any lending protocol.
Yeah.
If you can
As
see
we've
that
seen.
someone is massively borrowing with ETH as a collateral, or like, some secondary long tail tokens as collateral, you will go and try to liquidate them because you're going to make money doing that. That is a problem. And that is a problem that limits the size of the market of participants. Okay.
Yeah.
That's one. I think swaps in general underpin everything, not even just DEX trading, but swaps in general. Like, if you want to have a private lending market, you need to have private swaps, because if you're going to be liquidating encrypted collateral, you have to have encrypted swaps to liquidate that collateral, right? So like I think DeFi, it starts with tokens, then you have to layer swaps, then you can layer lending and all of those other primitives, right? Like they're all kind of composable if you think about it. And so I don't think that you can do confidential DeFi without going through the whole stack. Part of what we're currently working on right now is figuring out what are the primitives that we can build at the protocol level to facilitate confidential DeFi protocols to exist.
No, it makes sense, because otherwise, like, if you don't control, or if you don't at least have an overview of the whole stack, you do still have a potential for leakage somewhere along the way, right? In terms of being able to work backwards and
it goes beyond DeFi. You need on-ramps to confidential tokens. You need central exchanges to support confidential token deposits and withdrawals. You need wallets, custodians. And this is a big part of our focus in 2026, is making sure we're integrated in every touch point.
part of the stack. Exactly. Yeah. Wow. Well, you have your hands full then this year, I would say.
Pretty much. Yeah. Pretty much.
Well, good luck with that. But
hopefully confidential on-chain ETPs, that could be a good idea too. What do you think?
Well, now I'm going to steal that one and pitch it internally. Thanks a lot, Rand. All jokes aside, I think it's time to just turn our heads a little bit more forward and get your honest view of where you think this portion of the industry could go. And you mentioned some very exciting numbers at the beginning. So I'm just curious, how big do you think the market could be for confidential, let's say, number of confidential transactions as a percentage, let's say, over the next decade?
So if you look at historically, every encryption technology that ended up being broadly used ended up at 95% market share. TPS, 95% of internet traffic encrypted with it. Messaging, 95% of messages going through encrypted messages. 95% is the number that things kind of settle at, because there's always like 5% of use cases that don't want to pay for the, a millionth of a cent extra money for the encryption. Because it's very cheap now, by the way. FHE is very. So 95% of financial transactions on-chain encrypted, multiplied by the expected growth of on-chain finance. You look at those two things together, the addressable markets for FHE and Zama is so big that I don't even dare putting this in my slide, because no serious founder can pitch $1 trillion market for his technology. Nobody would take you seriously, but it is trillions, right? If finance moves on chain, which I think we all believe, and if it does need privacy, which I think we all believe, then privacy is a massive, massive, massive market in the future.
Yeah, I love how you broke it down. It reminds me a lot of some consulting kind of interviews that I did back in the day. So you take the addressable market, and you're right, it's difficult to put $1 trillion out there without having the logic behind it. So I fully follow that. Another question from my side, and this will be the last one, I promise, is: do you think privacy will become a standard feature of infrastructure, similar to how we obviously had it with the internet? And I guess at that point, it's obviously where Zama comes in to make that process as seamless for the user, because we've discussed on this podcast, user only seems to care when it's easier or similar for the user, i.e. it doesn't require extra steps, because then for some people, some of these extra features, let's say, they don't consider them as important or second nature, maybe, even though they actually care about privacy. Because your question, right? Like when you went up to that random person on the street and you're like, can I look at your bank account? I don't even think that everyday people consider that as privacy, because it's so baked into their daily life that they consider it status quo. So I guess you need to get to that stage.
I think, to be clear, on-chain privacy is going to be a winner-takes-all market. Okay, when you're encrypting data with Zama, it's not the same than if you're encrypting it with another privacy technology. Okay, so there is no composability between encrypted assets, which are encrypted under different standards. Whoever becomes the standards will have massive network effects, which means they will dominate 95% of the privacy transactions. So clearly, I want and I believe Zama is going to be that. But there's not going to be 10 medium-sized privacy protocol. There's going to be one massive one, and then basically that's it. So that's an important thing to keep in mind. This is like a everything or nothing kind of outcome for people working in privacy, including for Zama. If we do our job right, and we do encrypt 95% of transactions on chain, nobody will think about it. And this is amazing. You want that, because you want to remove.
You don't want to feel like it. Like nobody knows that you're on HTTPS. You just know that. You just take it for granted.
And nobody tries to replace HTTPS either, because it just works. And Zama wants to get to a point where it just works, where it's so cheap that you don't have to worry about the cost of encryption and privacy, and where it's so convenient and so deeply integrated into everything you're using that you don't even know it exists. It becomes the new default, effectively. That's our goal in 4 years.
Right. Makes a lot of sense. I think this is, the perfect point to call it a day. And Rand, I would have kept talking to you for the whole afternoon if I didn't have any other work to do. But it's been a pleasure having you on. And I think if we can leave the audience with one soundbite, it would be that if, crypto is the extension of the internet and finance as we know it, then Zama would be the extension of the HTTPS protocol as we know it. And so with that, it's been great to have you on. I'm definitely going to go today on chain and put some of my assets in confidential mode and see how that feels like. If I have any issues, I'll definitely forward my concerns to you. But by the way the sealed auction went when you guys launched your tokens, I feel like it is a very seamless process. So firstly, congrats to you and the whole team for everything that's been going on over the last months, but also I know it's been at work for many years now. So congratulations to you. And we hope to have you again somewhere in the near future when these things kick off more formally.
Looking
But yeah,
forward.
if there's anything else you want to add, now is your
Just
time.
one last thing. If you want to try for yourself, you can go on portfolio.zama.org and you can just shield assets and you can try to experience for yourself, see how it feels to go from public to encrypted on Ethereum.
Amazing. Well, go ahead and check it out, guys, for our viewers. And even my grandma should be able to do this, judging by how easy it
100%.
should be. Great. Well, thanks again, Rand. And for our viewers, please go ahead and like, subscribe, go watch us on Spotify, on YouTube. And of course, go ahead and check out Zama and check out our website as always. Thanks a lot, guys. Take care.
Thank
Thank
you.
you. Bye, guys.